As an agency owner, you've probably noticed the mergers and acquisitions activity in our industry. While deal activity has slowed since the pandemic era surge, qualified buyers are still actively pursuing well-run agencies. My goal in this video is to give you a clear picture of how agencies are valued, the factors that impact the valuation, and what your options are when you sell, so you're better prepared when the time comes. Let's start with the valuations we're currently seeing in the market. For agencies under $2 million in revenue, most deals are happening in the 2 to 3.5 times revenue range. Smaller book rolls may trade below 2, while highly desirable agencies with the right structure and growth story can sell at well above 3.5 times. For larger agencies, buyers typically focus on EBITDA, which is essentially your profit after expenses, and the EBITDA multiples are all over the board, heavily influenced by size and profitability. They typically start around 5.5 times and can go well into the teens. There are several factors that influence where you land within those ranges. Here are some of the strongest drivers. One of the first questions buyers ask is the book split. Many prefer commercial heavy books, but strong personalized agencies are still attractive. The key is matching with the right buyer. Buyers will definitely look at your carrier mix. Diversification is a big plus, while having too much of your book with 1 or 2 carriers can raise red flags. Buyers will typically look at trailing 12-month and 3-year loss ratios and want to see favorable trajectory, and will evaluate how the ratios may impact carrier relationships, appointments, and profit-sharing bonuses. They also value consistent net new organic growth, not just renewal-driven premium uplift. Clean financials make it easier for buyers to justify paying top dollar, so you want to come prepared with 3 to 5 years of accurate profit and loss statements, along with an updated trailing 12-month statement. Heavy reliance on 1 or 2 large accounts or a single producer can lower your value. Streamlined workflows, automation, and strong processes reduce buyer risk and therefore help to boost value. One of the major negotiation points in a transaction is how and when the seller receives payments, with most deals having a mix of payment types. The amount of cash paid at closing is negotiable depending on your goals and timeline. The typical range is 60% to 100% of the sale price, depending on how your transaction is structured. Some sellers prefer to receive payments over time for tax planning purposes, and some buyers prefer it as a way to mitigate risk. Earnouts are extra payments you can earn post-sale if agreed upon targets are met. They're often used to close the gap between a buyer's offer and a seller's expectations. Most of the above-market deals you hear about include an earnout as part of the deal structure. A lot of buyers will allow you to invest part of your proceeds into the buyer's company, so you have the opportunity for what's referred to as a second bite of the apple, basically a chance at another payday in the future if the buyer grows and or sells. So in short, you keep skin in the game and share in the future upside. Selling doesn't always mean you walk away. For many owners, it's about turning years of work into liquidity, taking some chips off the table, and de-risking your net worth, while choosing whether you stay involved, and if so, at what level. Here are the most common scenarios. Staying in a leadership role and continuing to run your agency with the resources of a larger agency behind you. Handing off admin and operations to the buyer, things like HR, accounting, compliance, licensing, so you can focus on the things you enjoy. Become a producer and focus exclusively on selling. That can be a salary plus commission role, or as a commission-only 1099 contractor. Or exit completely and move on to your next chapter with cash at close and a clean handoff after a brief transition. The right buyer will work with you to customize a plan that fits your goals. Having been in your shoes, I know that selling your business is a major decision, and you only get one shot to get it right. I provide confidential guidance, help clarify your goals, and then when the timing is right, leverage access to a vetted pool of over 24 active buyers, from leading national platforms to strong privately held regional players, to match you with the best fit. Even if selling isn't on your radar today, I can help you plan ahead so you and your agency are in the best possible position to maximize your exit when the time comes.